People say that public speaking is their greatest fear beyond being pushed off a cliff to their certain death or indeed divorce. But in my experience, the greatest fear is the hour before public speaking, when you have to organise the final details of the seminar. And to those of you who see me rushing around with a fraught look on my face, I do apologise. It's just a difficult time. I mean, just all these little details need to be dealt with. So my apologies. But welcome to our this is our fourth year of seminars. Mark and I have lost track. I'm John Piper, by the way, in case you weren't sure who this person was who was addressing you. Mark and I are partners in the business. Cameron is joining us, and Cameron will be talking on Excelsior later on. So welcome to the Trading the Gap for a Living seminar and the John Piper Session seminar, which we combine into one. So we intend to cover all the essentials today with four primary sections: Trading the Gap for a Living, which is Mark; System Development, which is myself; Advanced Strategies, Mark and Cameron; and Trading Triangles and Big Calls, which is myself. We always aim high. We always feel it's important to have very high objectives for our seminars, and we have 10 key points we want you to take away today. Before I go into that, how many people have been to one of our seminars in the past? Could you just put some hands up who you've attended previously? So a fairly good number. Welcome back. To those of you for the first time, you should be encouraged to see people coming back to our seminars. You know, they presumably enjoyed them the first time, unless they're masochists, which we assume they're not. This is your seminar. I always say this at the beginning of my seminars to some criticism from my colleagues, but this is your seminar, so please ask whatever questions you like. Personally, I prefer a dialogue rather than a monologue. I think we all learn a lot more from a discussion rather than just somebody talking away. So please ask questions as we go along. If time issues come in, or I think the question is not totally on track, as it were, then I might suggest we talk later on. We'll be here all day, obviously, and in the bar afterwards. There's plenty of time to discuss whatever you want to discuss, but either with us or indeed yourselves. I mean, I know a lot of you welcome the chance to meet other traders, which is one of the big benefits of this sort of event, I think. Anyway, turning to these 10 key points I'd like to take away. I start with, what type of trader are you? Because I think it is essential that you trade in a way that suits your trading personality. When I wrote The Way to Trade back in the 1990s, the subtitle was Discover Your Successful Trading Personality. And I liken it to somebody who's a very good tennis player trying to play football. You know, if you're good at tennis, football may not be your thing. And I think the same is true of trading, in particularly whether you might be a long-term trader. For example, my recent trade on pound dollar is one I know a number of you have benefited from, and that's a longer-term trade. Others of you may make money daily following Mark's service or Cameron's Excelsior service, and that may be the kind of trading you like to do. But it's quite important to find the methodology and the approach that does suit the way you want to trade. So if at the moment you're struggling with one form of trading, it may be that you just think about maybe consider changing to a different format. And that would be an extremely valuable thing to take away from today if that were the case. So do you prefer shorter term or longer term trading is one key issue, I think. Point two, are you missing winning trades, not making money overall? Obviously, this is what we're all here for today, is making our trading successful. Although having said that, many people have challenges in their life. They meet them, they become successful in business or in a profession or whatever it might be, and then they look for new challenges, and that itself, a new challenge can be very valuable because it keeps us very active. And certainly for those of you who may have retired, having something like trading to do can in fact be life-saving, because it can just keep you active and prolong your healthy, happy life. So it's actually, and that's quite a serious point. If you do research, if you look at the research on this, just doing something as you get older is vitally important. So you know, it can save your life coming here today. Quite seriously, it's quite a serious point. But I'll shortly be giving you 13 reasons why you may not be making money, and we'll be discussing those as we progress today. Point 3, access trades with amazing risk reward. This is more Cameron and Mark's area. Point 4, how to make consistent profits, another extremely important aspect of successful trading. Point 5, market psychology and how this repeats time and again. A number of Mark's systems are based purely on the psychology of the market, which repeats again and again and again, in fact on a weekly basis very often. Well, Mark, if I get something wrong here, do just say something if I'm not covering the point adequately. Point 6, learn how the real underlying market works and learn to take the opposite side to the retail market. I mean, for example, I bought gold on Monday, what day it is now. Everyone's saying it's a horrible bear market, gold's collapsed, it's finished, blah, blah, blah. That's the kind of time when it can pay to buy. I'm not certain the low is actually in. It's suited me to buy gold because it's also a way of shorting sterling, as it happened. I'm very negative sterling at the moment. But that's an example, really, of how you need to look at the psychology. You don't want to be buying when everybody's very positive. You want to be buying when everyone's very negative. You want to be selling when everybody's very positive. You know, that psychology is very important. Point 7, this is one of Cameron's. How to stick to your trading plan. Absolutely essential. Having spent months, sometimes years, developing your trading plan, it's amazing how easy it is not to follow it. This all comes down to human psychology and the way that we have put a lot of faith in our brains. I mean, this thing between our ears, well, obviously we've done very well. You know, it's kept us alive all these years and thriving. But it's bizarre that we should make a trading plan, spend months on it, develop it, and then not follow it. That's what we all tend to do. So, you know, how to stick to it is a big issue. Point 8, a very simple money management system I'll be looking at later on. Whoops, wrong way. Point 9, seeing the trading psychology at the key buy-sell points, another one of Mark's. And point 10, what is the one factor that all winning traders share? I'm about to tell you about that, but before I do that, I want to just look at a simple example I came across the other day, which I found quite fascinating. There was a discussion on LinkedIn about traders and profits and losses, and somebody posted a video from a scientist. I'm not sure what kind of scientist. I think he may have been a physicist, but he was basically talking about. He gave an example of a simple system, and the hit rate was 50%. So by that I mean that the winners and the losers were 50-50, so like tossing a coin. So it was a 50-50 odds. Apparently, actually, tossing a coin isn't quite so simple, because it depends on the weight distribution of the metals inside the coin as to whether it actually does land heads or tails on a 50% basis, which I've never thought about. I never realised that was the case. But I guess if you have a coin that's one half of it is lead, the other half is helium. I'm not sure it's possible, but it's going to land in a different sort of way than you might expect. Anyway, this system is 50-50. The winners get a clear 50% profit, and we're ignoring commissions and spreads, so that's not the case. If you lose 40%. Okay, so winners 50%. When you win, you get 50%. When you lose 40%. So who would trade that system? And perhaps we have a show of hands as to who feels that's a good system to trade. You win 50% when you win. You lose 40%, just 40% when you lose. No, less than I thought, actually. I mean, it's on the face of it, it's a really good system because, you know, every time you win, say you're betting £1,000, you win £500, and then if you lose, you only lose £400, and you've got 50-50. So why wouldn't you trade that? Or are you just being shy?
Because you might have back up again.
So?
You've got to make 66 and 2/3% if you have a losing trade, not 50%.
Well, that's true, but then that doesn't matter if you're trading the same amount. God. I mean, it's interesting. I mean, when I first saw it, I thought, well, that's definitely going to win. It's a really good system. And I mean, did you follow the discussion on LinkedIn? No. Okay. Well, I mean, that actually is correct. It's correct if you're forced to place your whole pot on the trade. So if you're just trading £1,000 each time, then you've got a very positive expectation. Because every time you win 500. Every time you lose, you only lose 400. Yeah? Is that,
Yeah, but once you've lost £400, you haven't got £1,000 to invest in the next.
But
Well,
you're talking about something like 2% of your pot, aren't you?
yeah, I mean, the point is, I didn't say you were forced to bet the whole lot at once. So if you've got a £100,000 pot, you put £1,000 on the first trade, £1,000 on the second trade, then every time you trade, you're either going to win 500 or lose 400. I mean, it's actually interesting because you've actually taken a different route. This wasn't the way I wanted to plan to present it. But it's actually, I mean, you're looking at it in a way that I can twist around the other way, because you're making an assumption that doesn't apply at all to trading. You're assuming you've got to bet everything on that trade. You haven't.
No, I work on a percentage. And on the percentage, I always thought that same thing will work. If you only put 2% on a trade, then you have to. I would have thought that would end up losing you money, but I didn't do the calculation.
Well, the calculation is quite interesting, because if you have 100,000, 2% is 2,000, yeah? So you lose 40%, which is £800, which is 99,200. So the actual trade reduction is trivial. I mean, you're not reducing your stake. You're not reducing your stake by 40%, are you? All you've done is reduced your 2% by 40%. So that logic is fallacious. Yeah. Is it?
Well, I can't see the figures because you're
That's a feeble excuse, John. Chris, sorry. Okay, 100,000. You lose £800, yeah? Yeah? And so you've got 99,200 left. So, yeah, the £2,000 stake in the example is only reduced by a very, very small amount. So it doesn't, the maths don't work that way. Okay. However, the point is valid. If you had to invest everything in the trade, then the point is valid. Because if you have 100,000 and the whole lot goes onto the trade, then you're down to 60,000. And then you're quite right. But I didn't say that. In fact, you on the basis of your assumption, you were wrong. If you'd assumed that, you'd have been right. I mean, the point I'm really making is that it's actually quite. This is a very simple system, and yet it creates even this very simple system creates confusion. It certainly confused me for different reasons, but it confused me totally, because I thought, well, Christ, that's wonderful, and then Chris's point came along, and he's quite right. If you have 100k times 1.5 times 0.6, you hit a winner then a loser, and as multiplication, the reverse applies exactly the same way. You end up with 90,000. That's not the point. It's an example. I mean, it's a discussion. I think it's a very interesting discussion point. So my first view was it's a winning position. It's a winning proposition, 50%, 40%. So I didn't take into account the point you're making, Chris. I then thought, well, no, it's not. How can this be? How can it be that you got plus 50 minus 40, but you're actually losing on every pair of trades? And I thought that was quite. I was trying to work it out. But even more bizarrely, in the universe, it's a winning system. But I'll explain this. If you toss a coin 2 times, you got 4 possibilities. You got head, head. You got head, tail, tail, head, and you got tail, tail. So basically, with this system, those are all the possibilities you possibly have. These 4 amounts. If you go head, head, you got 1.5 squared, which equals a profit of 125%. Yeah. If you've got these 2, then we're back to our minus 10%, because that's 1 of each. And if you lose, let me get the maths right here. I think you lose 36%. No, 64%. The point being that given the universe, it's actually it's a winning structure. Even betting the whole pot. The actual, if you take the whole universe of trades, the winners do so well out of it that you end up with about 40%. And I found that quite amazing. I mean, yes? Sir?
It's a bit like roulette.
Well, no, because the house is always taking. I mean, roulette is not. It's not a winning. The roulette has a minus figure down here. So, shall I move the slide over a bit? Sorry, this thing over a little bit. It'll probably collapse now. Just to make things even more. Hide the plant there. Though. Anyway, is that clearer? So on a roulette, and in fact on spread betting, you've got the spread coming out. On every turn, you've got the spread coming out. So you always have a minus figure down here. Yeah. And therefore, it's not a winning universe. But this system, despite having a losing structure for the vast majority, and in the example, he was saying you've got people like Bill Gates, Richard Branson, Caesar, all these very successful people, who basically are these people, are the people who go through it winning all the time. And he was suggesting it was just luck. They were just lucky people. I mean, I think that's complete rubbish. I mean, I think these people get there because they're very talented and they put the work in. But and they make their own luck, if you like. But I think it's an analogy of life, and as something to something to think about. I think it's quite a lot to be learned from this very, very simple structure, which I tend to return to later on today. But I just thought it'd be interesting to look at it because it certainly caused me a lot of thinking to work it out. And in fact, I only sort of cracked it really when I started to write about it. I find you write about something, it's a great way of understanding what's happening because you're forced to be logical. I'm forced to be logical when I write. One of the reasons I write, in fact, is for that reason. Anyway, I think it's worth some thought, which is why I introduced it at this stage of the proceedings. So we've... Okay. I started trading back in '85, and I just wanted to make a comparison between trading today and trading back then. Let's get some water. Because it's quite different. I mean, it's quite different in some ways. It's completely the same in other ways. But back in '85, there was no internet, no smartphones, barely any computers. I had no computer at all when I started trading. I think computers came in the 90s. Barry, you might know.
Late 80s.
Okay, I had an apricot computer at the time. Never liked apples. Always gone for different fruit. No charting software to speak of. In fact, we developed our own software back in 1990 called the Technical Trader Software. And in fact, I think in the 80s, I was paying Telerate, I think a huge amount of money a month to get a similar service to Reuters and Bloomberg, which was about all there was around. Minimum trading size was around £25 per point, as I remember it, on futures. Options were £10 a point. Very few books available, which is why I started to write books, because there was nothing available really at the time. I think Market Wizards was about it. Very, very good book, Market Wizards, by the way. And very few to zero good UK trading services. So I started the Technical Trader at that time in 1989. To fill that gap, I went to the States. I worked with some guys over there for a while and saw what they were doing and basically set up something very similar myself, which is still going today, of course, 25 years later, I'm pleased to say. But now this is all changed dramatically. But it's now more competitive. I mean, there's a lot more people in the business. In a way, the costs have gone up because in the old days you dealt with a broker and he charged you a commission, but it was a lot less percentage-wise than the spread can be. I mean, it depends on the frequency of trading. I mean, with a long-term trade, the spread is almost incidental because take the pound-dollar trade. I've been holding that for a few months now, so it's one spread over a few months. So 100. I mean, we took profit on the 500 points the first slot. But if you're trading in much smaller fractions, then often the spread has a much bigger impact. So it's something that has to be taken into account, and you need to be that much more successful to beat that spread, which Mark and Cameron are, as you'll know. But it's a point. The costs are a very important part of successful trading. I was on a panel last week with 3 other traders, Clem Chambers at Excel. Any of you at Excel last Saturday? Oh, well, one. Okay. And there was, Evel Knievel, Simon Corkwell, the bear guy, Clem Chambers, who runs ADFN, and Zach and myself. And the costs were the things that were really highlighted. I mean, for example, Evel Knievel shorts stock, and he's finding the borrowing cost has become prohibitive. He used to be able to borrow stock for, I think a cost of 0.5%, 1% per annum. It's now 6 to 10% per annum. And I saw IG suggesting costs of like 4% a month, I think. So things are prohibitive in some ways, and you have to, the actual cost of what you're doing is well, as I'll be coming to in a minute, the spread is the biggest cost you've got, and needs to be thought about very carefully. So these 13 reasons why people tend not to make money. Firstly, the spread, the costs, if you like. I mean, all the advertising you see, I mean, IG advertise everywhere all the time, and a lot of money goes into advertising. But so do all the other brokers, and their business is actually quite simple. They don't intend for you to lose money. They'd much rather you make money, because I mean, IG, they all want satisfied clients. They all try and educate their clients, because it's much easier to keep a client and just take the spread from them a year, and it's like growing a crop, I suppose. You keep the clients there and they're making money, then they'll be paying you the spread over many, many years. But they have this mantra called the 90-90-90 mantra, which is quite relevant to what we're talking about today. Has anybody heard of that mantra? Really, it's amazing. I mean, it is the principle behind all broking or spread betting business in the world, in fact. And it's not one you're going to like. I mean, it's not a mantra that's going to make you feel very happy, probably, because it's 90% of clients lose 90% of their money in 90 days. And that is borne out. That's borne out by the facts. So our job is to make sure you're not in that 90%, and that's what we set out to do. But well, they do actually, because they want successful clients. Because if you've got 9% of your clients losing money, you've got 10% who are making money, and those are the guys they can film and put on the testimonials and for the marketing. They want us desperately. They need us desperately. And they have a much better. It's a much better model. People win, but obviously we can't all win, because it's a negative sum game. With spread betting, we're all playing with the same pot, and the spread's being taken away every time. It's not the same with stocks and shares. Stocks and shares, in a bull market, things going up. So although you've got the brokers taking out commission all the time, you've got an ever-expanding value. But of course, in the bear market, it's much worse, because in the bear market, the value is shrinking, and you've got the people taking out the commission. So it's it's a very, you've got to understand these things, really. It's very important to understand the game you're in. And obviously, if you develop systems that work, and if you have approaches that make money, then the costs become a burden, but you're rising above them. But if you haven't, if you're just playing like you may play roulette, just taking a win, taking a loss, taking a win, taking a loss, then the money will just gently seep away. So the spread actually is the biggest issue, and you have to have, in item 2, a clear methodology, a system methodology, which gives you an edge, which is mainly what we're talking about today, I guess, in one form or another, be it longer term or shorter term. It is developing that edge, and then having developed it, overcoming the psychological issues to trade it, whilst at the same time using good money management, which that example I gave you a little while ago was basically an example of money management, understanding how the thing works. And it's just an illustration of how it can be, even the simplest thing can be quite confusing when you look at it from that point of view. I mean, there are 3 ways of looking at that system, and each one's very different. It's quite bizarre, really. So the no clear system or methodology, we'll be looking at that in detail as we go through the whole day, in fact. I trade on impulse, number 3. I mean, it's just something you've got to be aware you're doing, really. I remember back in probably the 80s, actually, I was doing a trade, and I looked back and thought, why did I do that trade? It made no sense at all. And I realised I had an argument with a friend of mine earlier, and I think I was just sort of had a self-esteem dip, and so I just did the trade to boost my self-esteem. And okay, maybe that was useful. I mean, it could have made me. I mean, my self-esteem being boosted could have been quite profitable in other ways, perhaps. But it's not a reason to trade the markets. And I think I suspect we all do the same thing. We are emotional animals. I think. Obviously, human beings, we try and rise above our animalistic parts, as it were. But the we live our lives emotionally. Where we're happy, where we're sad, what we aim for is a contented, satisfied life, which is an emotional state. We don't aim to become robots, at least I don't. In a way, to trade a system totally mechanically is a robotic function. So it's not surprising we're not that good at it, really. But we just need to be aware. And in fact, it's largely habit. I mean, the whole trading thing is actually is to develop winning habits. So that rather than thinking what you're going to do, you just automatically do the right thing again and again and again. That's what it comes down to. Which is where I think Mark is so successful with the way he runs the service, and Excelsior similarly. Number 4, I do not understand how markets work. I mean, you never can understand how markets work. I mean, it's never going to be open like a book, because you've got millions of traders doing all these different things for different reasons, often emotional reasons. All this news coming out everywhere all the time, which is often interpreted in ways you don't really understand. Because what's good and what's bad depends on your viewpoint. So interest rates going up can be good for some people if you're a saver, or very bad if you're a borrower. It just depends on your perception of each situation. So you can never understand the markets fully, but you can certainly understand the basics and how they affect you in a large sense. And you have total control. You have total control before you open the position. As soon as you open the position, the control changes, because you're now in the position. And so the market can toy with you to an extent. It can do things you just hadn't expected. And it's quite important to visualize what the market might do, how the market might affect your position. So you know how you should behave in all these different situations. The market goes against you, what will you do? And the more you plan what you're going to do, and you should do this with every position, you should know precisely with every position how you're going to act, depending on what market action does to you. Not necessarily that you will exit here and this kind of thing, but just if it goes here, I'm going to watch it closely and watch what it does. It just depends on your level of experience, your level of knowledge, and the way you trade. Your successful trading personality, how that affects the way you impacts the way you trade markets. Item 5, I do not treat trading as a business. It is a business. It's like any other business. You make profits, you make losses, you have costs, and it is a business. I mean, okay, it can be a hobby. There's nothing wrong with trading being a hobby. As I said, it can prolong your life. So you might enjoy it. I mean, all hobbies cost money. I mean, some of us go skiing. My daughter went skiing last week. It's £2,000 a week. It's gone up quite a lot in price, I think, recently, the last few years. But every hobby costs money. I like motor cars, and they're not cheap. There's a whole load of things that. So if you want to have fun in life, then you tend to pay for it. Business actually can also be fun, and trading can be fun, but it often, the two things don't often go together with making money. Item 6, I don't have a clear system. Sorry, I have a clear system, but I don't follow it. Well, that we'll be looking at later on. We've already covered it briefly. I keep missing all the best trades. This actually is a recurring theme with traders. It's the best trades are difficult to get very often because they can be very fast. And unless you're actually ready and waiting to catch the best trades, I mean, if you're using a system like Krautgap, say, now renamed Zeitgap for various reasons. Sadly, Krautgap was named after Krautrock, which is one of my favourite forms of music, so it's quite an affectionate term, but not everybody agreed with me, so it's now become Zeitgap. But a system like that, you just have to be there at that time in the morning to take the trades, and if you're not there, you're obviously going to miss the best trades, because they're the ones that are going to leap away quickly, and if you're not ready for them, you're not going to get them. I often lose far more than I mean to. It tends to be a mistake people make in the earlier days. I mean, certainly I've had some really severe losses in the past, thankfully, when I first started out, and that's how you tend to learn the lesson of using tighter risk control. It's a lesson I think most traders do have to learn the hard. I think we learn most of our lessons the hard way, sadly. But if you can do it, if you can learn it the easy way, then that's obviously a lot better. I find I keep taking small profits. I miss the big bonanza just around the corner. Again, it's really, really easy to take small profits. I mean, the market's always dangling these little profits in front of you, and you've just taken a few losses. You want a bit of a boost to your trading business. You see a, I don't know, £300 profit sitting there. You think, well, last time I had that kind of profit, it went down to £50, and I couldn't even buy a decent curry or something. No. It's very tempting to just take it, but you just can't really do that. You've got to have the big winners. I mean, again, Mark will disagree because his trade is different. He's looking at a very different strategy. But if you're trading larger moves as I do in Big Call, then you really got to go for those big moves. You've got to get those big profits. I mean, pound dollar we're still short from 160 thereabouts. And I'm expecting it to go down to, I'm expecting parity, in fact. I think pound dollar will go to parity with the dollar, not just the euro dollar as well. I mean, not tomorrow, I hope, but maybe two years' time. So yeah, there's a lot of profit there, I think, just waiting. But it's not going to, it's going to come in time. You have to be ready for it. Which is, this is the second big mistake. I think the big mistake traders make is not allowing the big profits to come home. That's the, because without that you're just spinning your wheels. Small loss, small profit, small loss, small profit. And I say it might be enjoyable, but you've got to key into those bigger moves. Right, I trade emotionally. Same as instinctively, really. It's a similar kind of thing. I mean, it can be a good way of trading if you trained yourself to be successful in that fashion. There's nothing wrong with trading emotionally and instinctively if you're making money. So that's the bottom line. Is your trading successful? I follow a tips, but only occasionally. I mean, I think services don't have a value. I mean, I'd be the last person to say a service doesn't have a value, but you either have to follow the person sort of totally, or just use it for ideas. I mean, with a Big Call, I try and make it educational. I give recommendations to sort of show the logic of the techniques I use. So there's a bit more in there. A lot of people use my service for short-term moves that they tell me, and they're quite. I don't make short-term recommendations, but they tell me I'm very very good on short-term moves. I definitely comment really, but so you obviously have to get value from what you're taking. But if you follow tips only occasionally, then again you're back to missing all the best trades probably, because it's the sort of you're not necessarily that serious about it. So. I've not taken the time to understand how markets work. You need to put time in. Time is a key element, really. I mean, all of you here are putting the time in. I mean, that's why you're here in one way. Is you're taking it seriously and you're putting the time in. So some of these points aren't going to apply to you. I've never had any training. Have no real idea what I'm doing. It's quite curious how we might go and, I don't know, local tennis club have tennis lessons, local bridge club have bridge lessons, but many people trade without any kind of tuition whatsoever. Again, this doesn't apply to everybody here today. But it always struck me as rather odd that I understand why it happens. I think someone who's a successful businessman will come to the market and think, well, I've got a good view of the economy, and therefore I'll be able to trade successfully. But where the economy is doesn't really affect the shorter-term moves of any particular share, for example. And as you know, a share can have the greatest earning in the world, can be released, and the share can go down, because they may be the greatest earnings ever had, but they don't match the market expectation. And this kind of thing. I remember a sister I was using at one point told me that one of his clients had just gone bust because he'd been convinced interest rates were going up, and so he went short of the stock market. And over the course of a year, interest rates went up, as did the stock market, and he was actually wiped out by this. And it's it's not a happy story really, but it happens again and again because just this basic lack of understanding of the way the market works. I know I need a mentor, but I've made no effort to find one. It's not easy finding a mentor, in fact. I was quite struck by an article I read recently by Richard Branson, in fact, who said at the age of 15 he realised he needed a mentor. And I've never realised I need a mentor until about 2 years ago, I think. And it's actually quite, but I think if you find a mentor, I mean, it's obvious. The key thing with a mentor is finding somebody who's actually done what you want to do. Because once you've done once you've done something, you know you can do it. It's that certainty that's important. I mean, forget qualifications. I've got quite a few, but I don't think they're terribly important. Really. I think it's actually what you've done that's important. So, but I say it's not necessarily easy to find a mentor, but it's a good philosophy, and I can understand just reading that one sentence why Richard Branson is so successful. because he knew what he knew what he needed. You know, and he had a plan right from the age of 15, which really impresses me. That's, I mean, I tend to mention Karen Brady as well, from who was on The Apprentice, I think. And when she was 18, I think she decided, I don't want to go to university, I want to go into business. I want to be a business person, and university's going to waste my time. And it's just that focus, you know, at the age of 18, having that clarity of focus is something that's really valuable. Anyway, it's something I didn't really have, but it's certainly useful if you have got it. I think you can develop these things if you know what you want. You know, just knowing what you want is a big advantage as well. Finally, I'm a born loser and don't know why I bother. I do hear this occasionally from people. Clients come to me and say, well, I'm hopeless. But it's actually it's a vicious circle. People get into a situation where they don't do the right thing, and therefore they never make any progress. It's actually all about doing. As long as you do stuff, you learn, and if you learn, then you become an expert. And that's the key thing. It's just I mean, born losers don't do anything, in my experience. They don't actually get out there and try and do stuff. So they never learn anything. So they never develop any skills, and therefore they don't have the skills to do anything, so they don't do anything, and it just goes around in circles. You want to become a success, just do stuff. I mean, don't go rob a bank. I wouldn't say it's robbing a bank. And he told me to rob a bank. I didn't tell you to rob a bank. Just do useful stuff, and that's how you learn. So, any questions at this stage?
John, you brought up the question of trading costs.
Yeah.
And if you take the longer term trade, rather like your pound dollar, you get the spread at the front.
Mm-hmm.
But I found I've kept the trade open, obviously two and a half months now. IG, of course, charge interest every night. Carrying
quite small,
forward,
though.
it's quite a cost actually.
Yeah, I mean, it is a factor. Yeah.
I don't know how they work it out, but it's.
I mean, obviously, I'm aware of that because I'm charged as well. It seemed to be quite a trivial sum, I thought, but maybe I should look at it more carefully. I mean, it's a
I don't know how they
price.
work it out. It depends on the amount you're putting in, but.
I mean, personally, I had bought dollars as well, and I also bought gold for that reason. So I'm sort of switching my assets from sterling to dollar and other currencies, in fact, because I think I don't know. I think with sterling showing that pattern, it's going down quite a long way, I think. So I mean, you buy dollars, for example, then you could put the deposits on. You could actually get a return from your dollar assets. I mean, you could buy dollars. I'm not sure Wall Street's a good place to invest money, but not actually bonds are looking pretty shaky as well. So I mean, but you could put money on deposit certainly and get some return. But so you could avoid it by doing that sort of thing. Which is it much easier to hold? I mean, if you've got $30,000 on an account somewhere, it's much easier to just leave it there and not worry about the spread betting situation. Mark, what time do you want to start for your session?
So I need to set up, so maybe a quick coffee.
I haven't quite finished it. I mean, I haven't actually. I just wonder what time you wanted to. Okay. Okay. So what is that one key factor all successful traders share? They all develop their own winning strategy and operate it in a personal way. So that's the key thing. You just need to have a winning strategy that is your own, because it has to suit your personality. And that's what we'll be talking about today in the main. Okay. I'll just quickly go through system development, and I'll be about 5 minutes or so. Let's go. Okay, I've never met a successful trader who has not developed his own approach to trading. It might often be based on the kind of techniques you hear today, but every trader adds something from themselves. And it's not something you need to do immediately, but it's something that you should be just bear in mind, that you need to think about the development of the strategy. I mean, having said that, if what you're doing works really well and it's all going fine, then keep doing it, obviously. But then once that's happening, very often you have quite a lot of spare time to do other things. So just start doing some research, start looking to other ideas. I mean, it's having got one business going right, there's no reason to change that. But you can certainly look at other areas and see what else might be developed. So system development is an essential skill, and in fact, you do it anyway. I mean, all the time. But whatever the system is telling you to do, you're probably doing different stuff because that's the way we're made as human beings. So you're always adding stuff and changing things in any case. I think that's true of everybody here. Anybody here just religiously following a system? That means not that means not quite. So in fact you're changing it anyway. I mean you're doing this work. You're just not doing it consciously. Maybe you're not consciously saying, well, how should I change it? You're just doing it because you feel like it. So I'm just saying, well, why not do it consciously rather than unconsciously do it? Subconsciously, sorry, unconsciously. I'll cover that, I think. Okay, well, I'll just have a quick look at Kraut-Gap, just as a system I developed. Who is familiar with Kraut-Gap? Sorry, Zeit-Gap, I should say. It's a gap-based system. In fact, let's look at the chart today, because I haven't actually, having said you should look at charts, do your system methodically every day, I haven't had a chance today with the seminar. So I'll just have a quick look. And what happened today? We can just... It's collapsed. Okay. When you say collapsed, Mark and I have different terminology. When a collapse to Mark is 20 points, a collapse to me is 300 points. So no, it has gone like that, hasn't it? Okay, well, no, today's a good example. We're doing a great day to trade the thing, wouldn't it? Zeit-Gap is a gap-based system. We look at the previous close. The previous close on this chart was 7682. So that was the prior close. This is from a price service called Morningstar. So it gives you the official pricing. You can get the same charts looking at ADVFN or Yahoo Finance and other sources on the web, so you get them for free. Basically, all the system does, it looks for the prior close. It then looks at the open the following day, and it says, okay, is there a gap? And there's clearly quite a decent gap today. And the open was at 7719, so the gap was quite substantial, about 37 points. And basically, we have a few triggers. And we use the 5-minute bar system. So you'll see that the first 5-minute bar formed the high of the day. The market came down, triggered the short by going through the low of the first 5-minute bar, and closed the gap in about half an hour.
So, sorry, John, even though the first 5-minute bar is sometimes only 2 minutes or 3 minutes, because there's sometimes you still use this first 5 minutes rather than the spread betters.
Well, most people use spread betting. I tend to use this because the system is based on this. But the spread betters, I mean, IG will give you a slightly different value, but probably not by much. I mean, there's an easy 37 points there. I normally actually trade it for the longer term anyway, so I'm slightly pissed off by this. I would probably just held this. But in the event, I was rushing around to get this thing organised. But that was a great Kraut-Gap trade, actually. I mean, there's a anyway, that's how Kraut-Gap works. That's the exit. We have a 2-point filter just catch stuff that comes close and the other way. We use a 5-minute bar system. And so that's 30 odd points. But I say I would normally run it, so it would have been quite a nice trade. That's not part of the system. The stop is 52 points from the entry, and then we tighten that at 11 o'clock. And that is a Zeit-Gap in all its glory.
Do you run the NASGAP on the same basis?
NASGAP, yes. It's different parameters, but it's very similar. Same thing.
This shows the last trade, not the settlement business, does it?
This will be settlement.
This will be settlement.
This will be the official close. Which will differ from IG's figure, but often not by a huge amount. Maybe 10 points difference. But you want to use the official pricing. Yes.
Where did you put your stop on that trade?
52 points. And then we tighten it 26 after 11 o'clock.
When it's open, how can you tell which direction it's going?
Sorry?
How can you
It's going down.
Yeah.
Sorry, what should I? Well, we ignore the direction of the first 5-minute bar. All we're interested in is the penetration of the low of the 5-minute bar. Okay, I'll leave it at that. Thank you for listening.
Cheers.
Mark?